And we're back. Monday. What is it? June 9th.
You're dang right it is. Good morning, Frank. Happy to be here.
That's good to hear, man. How was your weekend?
The weekend was good, but too long.
Too long, yeah.
Glad to be back.
Had to be back.
Yep.
I think that I'm turning the corner into like Tom, Pete,
Oh God.
that kind of territory where I'm checking markets nonstop now over the weekend because I just maybe I don't have anything else to do.
Maybe too much of your portfolio is crypto. They at least
Maybe
they
too
at
much
least
of it's
have
crypto.
some sort of reprieve. Like
Crypto has no reprieve.
28 hours on. I know. I'm saying Tom and Pete.
But
they
I think
give themselves a little bit.
They've spent almost every weekend and vacation and whatever time away from markets wanting the markets to be accessible to them.
Fair.
And I'm starting to get to that point, not because I'm like doing a bunch of crazy stuff, but
Making so much money.
I just want to know what the heck's going on.
Yeah.
My mom was in town this weekend.
Very nice.
That was great.
Did you you had Bob's Pizza for dinner?
Dude, I think it's gotten to the point you can't take flights. If you have a flight scheduled after like 1 p.m., you might as well just book it for the next day. Because
They're
like
still bad?
it's gonna be delayed.
That sucks.
It was yeah. She was supposed to come in from Lexington to Chicago, seemingly simple enough flight.
Popular route. Hub to hub.
Leaving at like, I guess, I don't know, 4 p.m., 5 p.m. I think it was Eastern, whatever. Getting in at like 7:20, and she didn't get off of the plane until like 11:30.
That is so demoralizing.
And like, it's one of those like, oh, it's delayed. And so it's like, all right, well, I'll come pick you up. It's like, okay, like we get in now at 10. All right, like I get to the airport at like 10:15, whatever, like some time for her to get off the. And it's like, oh, actually, we're landed, but they don't have a gate for us. And it's like, what is going on at 11 o'clock? Like, all the gates are taken. So it's another hour that I've thankfully at O'Hare, they've just given in to like anything goes.
Oh,
now.
in terms of just like waiting there?
Maybe it's because it was so late at night, but you know
good.
how there's like usually the guy that's like, you got to be moving. Like, you got to be moving. Yeah. I just like pulled up to Terminal 1, parked right there, and didn't move for an hour. Yeah, just like checking my phone,
that might
podcast.
Be a record.
And so it wasn't. Nice. Thankfully, in 2025, you can amuse yourself pretty much anywhere. But like, it is just like I told her, I was like, I schedule almost all of my flights pre 9 a.m.
Has to be.
Because it's just like, if it's in the afternoon, one of those flights got delayed.
Summer rains too.
It's ridiculous.
All little thunderstorms, people freak out.
But yeah, she got in town. It was great. She went to see some play with her girlfriends. Her and all of she grew up on the South Side, Italian American neighborhood. Her and all her girlfriends are funny little Italian American women. And they went to see some Tina Turner play.
Heck
and had a ball.
I think I saw it at like the Chicago Theater.
I think Cadillac, yeah.
Oh yeah. Nice.
But yeah, it was good. And then we crushed Mission Impossible Fallout yesterday, and watched Jerry Maguire. Have you seen this movie?
Mm-mm.
It's pretty good.
Watched Ocean's 11.
So good.
So good. Just class. Except for Don Cheadle's accent.
He switches it up a couple times.
Pretty bad.
Man, I haven't seen that movie in a while.
Worth rewatching.
Yeah, amazing. All right, let's get into it. What's going on?
We've got a pretty exciting open in terms of U.S. dollar pairs. If we want to hop into the platform, slightly softer open for equities and metals and whatnot. But this U.S. dollar, we've got some movement, especially in this Australian dollar. When we started the show, it was up 0.5%. Now pulling back a little, but we had some. If we look at the hourly chart, it tells us a little bit of the story. We had a big move, a little bit of a move on the open, consolidated, big move around a China exports number.
Okay.
Lowest exports to the U.S., but very strong otherwise. So I think not good for U.S. dollar, particularly against these Australasian currencies, but not too much else going on. Not sure.
Why don't you zoom out on this Aussie, because this is one that like
We're up there.
Yeah, man. But look at this. It feels like I'm just gonna do it. It feels like Ethereum. It feels like it's like, oh man, like nice rally here to start the week.
You've got to be
like
up more than you have
feeling
been.
strong, and it's like, where are we at? We've got to be like 72 cents at this point, 65 once again, like not going
man.
anywhere. Which good for you.
Building in recent days,
Stronger
but yeah,
than it's been.
the sell-offs, man, they take you right back to square one. But yeah, I guess now holding this 64-cent level much better than in months prior, as we've called out many times before. You know, on a percentage basis, up a ton from this April low. But yeah, if you're looking at markets at the present, not too much runaway in this U.S. dollar.
It just feels like it's fully under the radar. Like we had obviously all the volatility in early April, and throughout April, it quickly became that euro and pound were the winners against U.S. dollar. If you're talking about major currencies against USD. And after that, it kind of, there was, and that's why I bring up ETH almost, because it's like, oh man, big rally in Bitcoin. And it's like any day now, ETH is going to rally.
Catch up.
Any day now. And it just hasn't. It hasn't fallen apart. It's shown strength in certain times. And this one, you know, obviously as well, you've seen as recently as the end of May there was a really nice rally from around 64 cents, well above 65. And they gave it all back. And it's just like this feeling of it's strong, it's not falling apart, it's not going back to the lows. These are the strongest prices here above 65 cents going back to November, December of last year. But we're just not going anywhere. Like you pull up like the pound, and it's like you see some strong rallies, and then you look at the ground that we've covered, and it's like, oh yeah, like it was trading 130, and then it was trading 131, and then it was trading 132, and now we're 135 bid, and feeling like they might try to finally break above 136. So just super different feeling. These commodity currencies, they've been very volatile. They've been moving around, but you're not seeing the upside like you are these other currencies.
That is my question here. You kind of got my gears turning on crypto comparisons. What do we think here in this Australian dollar, US dollar market? Obviously a little harder since they're more two-sided, not necessarily have a positive drift. But what do you think of this pair's relationship to volatility right now? Before, if there was a vol shock, very bad for Australian dollar. If volatility is coming in, is that necessarily...
Oh, it's equity vol.
Correct, or just global, any sort of volatility in this market, is there obviously prior bigger moves to the downside, to the U.S. dollar's favor? If volatility is starting to come in a little bit, does that benefit this Australian dollar?
It seems like this pair has become more than anything I can hang my hat on, and maybe we should run the correlations or something. Sure, there's some equity vol correlation in there, and you'd look at April because you'd say, well, that early April chart when the tariff stuff is becoming real for a lot of countries, the volatility in pairs like euro dollar and dollar Swiss franc and some of these other major U.S. dollar pairs was one directional. And this one, you see two sides of it. And so you'd say, okay, well, there must be a correlation here to U.S. equities. And I think actually the murkiness of that move and what we've been seeing is throwing me off, and maybe other people. It's a really strong correlation seemingly to Chinese equities. I think that the correlation is really getting robust between Australian dollar and Chinese equities, and this as a proxy trade for Chinese equities. And I say that, and everybody might say, well, Frank, in the long run, you know, the correlations between Chinese equities and U.S. equities is probably going to be like 0.7, 0.8. Yes, of course. Recently, this has been weird. The last couple of years, this has been weird, where S&Ps, NASDAQ, are printing new all-time highs constantly. And guess what? On a week like this one, they could make all-time highs again. And Chinese equities, it's not the same. Now, you've seen Chinese equities bounce pretty well in the last year or so. They're no longer kind of like drifting lower as U.S. equities are drifting higher. But this one, to me, and I again harp on the Chinese equities part of it, is because you'll see in the last couple of weeks days where Chinese equities are up 1% or 1.5%, and S&Ps and NASDAQ are down or flat. Right. And this pair is moving. And so this, to me, one of the most volatile pieces, one of the most interesting pieces, but not from a price point. The least interesting from an extreme or a price point and trying to hang your hat on, being like, oh man, 65 cents, that's expensive. Or when it dips down to 64 cents, oh man, that's really cheap. This has weirdly been one of the most range-bound pairs, least extreme pairs, but also day-to-day most volatile. And I mean, just if you have free time, just take a look at a Chinese equity basket, and you'll see a similar thing where it's like, oh man, like not falling apart, big moves, but like not shooting the moon by any means.
Exactly. Good call out there. And speaking of historical extremes, let's check in on one of our favorites here.
This has been a fun one last couple of weeks.
U.S. dollar, Swiss franc. Up a little bit in the early hours here, but not didn't run away from us as we thought it might on Friday morning. Really drifted back down to end the day, opening here a little lower, about where we started last week. What do we think coming in here? Because just for some historic context, we're consolidating around this 82 level. And that is the low for about a decade plus. You know, we have the 2015 Euro DPEG as the last time we were showing these prices. And no real time otherwise spent around here. But if you thought this was cheap in April, you're still right here at unchanged.
And this is why those commodity currencies hurt my feelings so much. It's just because like this is, from a price extreme standpoint, a super interesting one. And this has been not nearly as volatile as Aussie. Right. But like you see these moves down to 81.5 or as recently as a mid to late April there, below 81, and then a move back up to 82, 83, 84 even here a few weeks ago. And the carry trade dynamics around this one have been so interesting. Of course, this market can break down back below 81 or even 80 and get to even crazier decade-long extremes. But it is a funny one for your theoretical meets practical example. When this market broke down in early to mid-April, tariff talks, we go from 88 all the way down below 82. If you have the patience or whatever to get in around 82 cents, even 82 to 83, that area on whatever day that is where there's the huge bar where we break down below April 10th there, and you've just been holding this dollar long, getting the carry trade. I think the Swiss interest rates are 25 bips and U.S. rates are still obviously 4.25. And you're getting the long dollar carry trade that can range from, it looks weirdly low right now. I don't know what's up with that. We'll have to look into that. But
still positive.
Usually from 0.5 point to 1.5 points. And Paul corrected me on this. I was on with Paul last Wednesday that I was like, oh yeah, like that, times 250 or whatever. It's a 365 thing. It's every calendar day of the year that you're getting the carry trade. And of course, those carry trade dynamics can change. And there's price action risk of this market breaking below 82, below 81, going against you further. But it is a funny one that if you were long at 82 and you held from mid-April, early to mid-April there, April 10th, whatever day it was, and now it's June 10th almost. Yep. You've gotten now 2 months of carry and the market has not moved. Now, of course, you might say, oh, well, when it went up to 84 cents, I would have taken the 200 points in profit.
Sure.
Versus, 60 times, let's just say it's, as an example, a theoretical 1 point of overnight every night. I would have taken the 200 points in price action profit versus the 60 points in carry trade profit. Sure, but it's just a funny one and an interesting example for the people out there that trade options or long crypto and do the staking and are just like, oh, well, I'll buy this thing at 100, and if I stake it for 8%, and it's 100, then 8% APY is better than 4% or 3% or 5%, whatever. Sure. With treasuries. An interesting one here, and yeah, like I say, the price point is more interesting than those commodity currencies. The carry trade dynamics, obviously Australia has more similar interest rates than to the U.S. Euro area, similar interest rates to the U.S. UK, similar interest rates to the U.S. Makes this one a really fun one to look at, and one that we've been looking at constantly, and yeah, has been like, oh, it's back below 82 cents. Right. Interesting. And it's like, oh, it's back above 82 cents. Interesting if you wanted to take that, price action profit. But if you've just been, sitting long, taking the carry, we haven't moved off of 82 really for the last 60 days.
Yeah, great walkthrough in a very interesting pair. Where do we want to go next?
Did you put together something?
Or
let's look at dollar yen really quick, just because we had a really interesting close to the week. Sorry, guys out there. Thanks for pulling the chart back up.
Oh, yeah. You've got a nice little...
Non-farm comes out. USA, as you like to say, stronger than expected. It was a classic, all the employment data throughout the week, bad.
Yep.
And then non-farm comes out better than expected. And you see US dollar rally into the weekend pretty much all the way up to 145. They sell it off a little bit into the close there, just to like 140. Actually, no. The Friday afternoon it was just 144, like 75ish.
Yeah.
So not really that much, but now they've sold it off all the way down to 144 recently, as an hour or two ago. Railing as we speak now to split the difference. But man, different than the pairs we just talked about. Obviously, 140 to 145 is not a decade-long low for U.S. dollar versus Japanese yen. But this is just a fun one because it has those carry trade dynamics similar to dollar franc, but not at those lows, and actually a really wide range relative to that Swiss franc. That Swiss franc trading like back and forth around 50 or 100 pips, low vol, which might be interesting for those people trying to take that carry trade.
Exactly.
But this one, a little bit higher vol, range of a few hundred points, keeps getting up to 145 and unable to stay above it. But keeps getting down to, like we saw mid last week, gets down to below 143 and can't stay below it. So everybody, when it gets down to the low 140s, is like, the carry trade's unraveling. The U.S. dollar is getting annihilated. And then it just keeps bouncing back up to 145. It's an interesting one to watch.
Absolutely. We'll see where this range takes us this week, but that is why I've prepared some slides for today.
Cool.
We've got, we'll see what the week ahead brings us, but we've got a CPI number on Wednesday. We've got a Fed meeting next week. There's some signs that point to this could be more of an inside week.
Okay.
Not a ton going on unless we get one of these, unscheduled headlines that shake things up. But prompted me to ask the question, which Forex pairs tend to move the most? And this is some analysis we've done time and time again. But taking a look at popular U.S. dollar pairs, we've got the standard deviation of daily price changes. So this will give you an idea of what a standard daily range is in pips for all of these markets across 4 different time horizons here. What stands out to you here? I'll start with, I look at the 3-month standard deviation primarily because that gives, of these data points, kind of enough data to base things off of, but also stays a little bit relevant to how things are moving across the globe right now. But this 3-month, to me, is now looking a little bit more of an outlier because it includes some of those early April shakeouts, but those are now maybe behind us.
Sure. Yeah, I definitely. First thing that you see is obviously dollar yen with the biggest pip moves out of any of these popular USD pairs, but also just the general trend. If you move from right to left in almost any of them, you're seeing a little bit of a widening out of that standard deviation. So an increase in volatility going from 6 months to 3 months. So to Glenn's point, the last few months being the most volatile period of any of the time periods that we're looking at here historically. But then the general trend from 3 months to 1 month to 1 week here is lower vol, tightening of standard deviations here. Now, I also don't think it's any coincidence that if you're looking at the last 1 month and the last 1 week, what have we not gotten as we head into an FOMC is we haven't had an FOMC in the last month.
Sure.
So there's that. But yeah, more importantly, in the last month, we've seen a little bit of diminishing volatility returns around the tariff talks that obviously hit 2 or so months in the past. So it's an interesting one here. A couple of call outs for sure. I mean, that dollar Swiss franc.
Right, yeah.
Really interesting that vol got so juiced in that they were moving. If you're looking at the 3-month correlation, I guess that the number is still relevant right now. If you're looking at the last 3 months, not correlation, standard deviation, the standard deviation would still tell you, man, this dollar Swissy is moving 70 points on a given day. Now, we haven't really seen that in the last month or so. So some interesting little tidbits. But when I look at the left part of your table here, I wouldn't necessarily take those 1 week numbers because we have been pretty low vol the last week specifically.
Right.
But I would more look at that 1 month number as being like, my porridge is too hot, my porridge is too cold. That one probably is the column that I'd be like, this seems normal because of course, yeah, like to think that we're going to get 120 points in dollar yen every day, I don't think is normal because that has just those crazy tariff moves of early April in that data set. Same with dollar Swissy, 75 points every day is a lot to ask for. But I mean, 60 points in euro dollar, reasonable, 50 in sterling, 100 in dollar yen has absolutely been reasonable. And as you go down the line there, of course, it looks like, oh man, those commodity currencies are so boring. 30 points in Aussie, 32 points in Kiwi. Those are lower notional pairs. And so on a percentage basis and a potential return and risk basis, more volatile than some of the other ones you're looking at.
Absolutely. And quickly wanted to call out some of these non-US dollar pairs, perhaps those slightly more volatile. And this one, an important call out as well. If you look, to the biggest number there, that Euro Australian dollar in the 3 month.
That's cool.
That one as well is similar to kind of the US dollar Japanese yen, where it's priced pretty rich as opposed to, for US dollar, Australian dollar is the base currency.
That's very cool.
So you get some similarities there.
Euro Aussie, great. Wow, this just calls out that Euro Aussie might be a better pair for day trading, for scalping around than that Aussie USD. Man, some interesting action. Again, that 1 week, I would kind of throw that out. It's been kind of a lame last week. But if you're looking at even that 1 month, as well as obviously the 3 month data, that's some significant price action for people looking at some day trading in non-USD pairs, that Euro Aussie. And of course, that's going to be a relatively low margin pair as well. Euro USD being 2% and Aussie USD being 3%. So that pair is probably 3%. And then that sterling yen, another interesting one. as well, because you might think like, oh man, on those weeks where U.S. dollar is beating up on yen again, it's like, oh man, like this is probably the most extreme price action. But sterling's been beating the hell out of USD the last couple of months, and so if you're looking for some extreme price action, that sterling yen piece might be your ticket. Yeah, across the board, pretty much there, over 100 points of movement. That's this is some cool numbers.
Yeah, similar trends, but definitely some unique opportunities if you're looking to diversify past that U.S. dollar. And before we get out of here, just wanted to call out what you called out earlier, that there are, we were looking just at per pip movements. There are definitely some other variables that go into all of these calculations. And a quick example is looking at the Australian dollar versus U.S. dollar Japanese yen. Because of the margin rates, because of where we are in terms of the exchange rate of Australian dollar, US dollar being so cheap, you can, with the same margin, you can size your trade a little bigger, get more movement per pip, and get a theoretical profit or loss based on the daily ranges a lot wider than that dollar yen, even though dollar yen has a lot higher of a daily pip range. So a lot of things to consider here when you're looking at these per pip movements, but we'll see if it ends up being more of an inside week like those 1 week standard deviations, or if we start to see some volatility come back in these major Forex pairs. But that'll do it for us here today on Forex Focus. Thanks for joining us. It should be a fun week. Thank you, Frank, as always. A lot of trading ahead, so stay tuned on Tasty Live for Tom, Tony, and Vanetta up next.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we